How's it going, everyone? Welcome back to a new video. In today's video, I'm going to cover sniper entries and how we can use the method I'm going to teach you in this video to get sniper entries in every single trade that you take. So if that sounds good to you, stick around because this video is going to be a good one. Now, the method that we are going to use to get sniper entries in every trade is we are going to optimize fair value gaps. Fair value gaps is such a big cheat code in the market that you can use to get the perfect entry almost every single time. Remember, nothing in trading is 100% and you can't bank on anything being 100% win rate, but this will definitely improve your entries when looking at the market. If we look at this piece of price action over here, where is our first fair value gap? Our fair value gap is from this candle's low to this candle's high. This is our fair value gap. For those of you who do not know what a fair value gap is, it is a 3-candle pattern where we have candle number 1, candle number 2, and then candle number 3. And the low of candle number 1 does not touch the high of candle number 3. So we have this gap in price. Here we can see that we have candle number 1, we have candle number 2, and over here we have candle number 3. Candle number 1's low does not touch candle number 3's high, leaving a gap in price. That is known as a fair value gap or an imbalance. So what a lot of traders will do is they will take their entry at the retest of the fair value gap. So if you have to go ahead and mark out this fair value gap, they take their entry at the retest, which is over here, and they put their stop loss above the swing high, and they target a 2R for this trade. If you look at this piece of price action, we can see price is very choppy, very consolidating into this fair value gap. The bodies and the wicks are respecting the fair value gap. They are closing above, so they are not inverting this fair value gap, which is a good sign. But you don't have a lot of R multiple in this trade. Now, how do we go ahead and how do we actually optimize a fair value gap? So how do we optimize a fair value gap? How do we optimize our entry taking? Now, looking at this chart, this is a 5-minute chart. The previous chart that you saw was a 1-hour chart. Now, the 5-minute chart has the fair value gap is from this low to this high. This is that 1-hour fair value gap. We can see on the previous slide that the traders took their entries on the retest of that 1-hour fair value gap, which is here and this level of price action. So how do we optimize this? The way we optimize this is within that higher time frame fair value gap, we are going to be looking for unmitigated smaller time frame fair value gaps. Over here we have a fair value gap, over here we have a fair value gap, and over here we have a fair value gap. If price action runs to this fair value gap, which is the start of the fair value gap on the higher time frame, it is very likely that price action is seeking the most extreme fair value gap to rebalance all of these different imbalances within this displacement leg. Remember, everything in the market is about fair value. So the first thing we do is we mark out the extreme fair value gap. The extreme fair value gap is over here, and we can see that price action trades perfectly into this fair value gap before running lower. So if you use this method, your entry would have been here compared to here, and your stop would have still been at the same position at the swing high. So you can already see that your risk multiple is much higher using this method. But there's another way that we can further optimize this method, is we look to pair fair value gaps with PD arrays. If we look at price action here on the left, we can see we made a low, we made a high, to a lower low, to the higher high. What does that mean? That means this down close candle is my breaker block. And within this breaker block, we have this fair value gap. So this is an optimum place to take your entry. You can place a limit order here with the stop loss above the breaker or above the swing high. This will make a lot more sense when I move on to live chart examples. So here we have our first example, and we are on NASDAQ or NQ on the 4-hour time frame. Remember, from the 4-hour time frame, we dropped to the 15-minute time frame. So on this 4-hour chart, we look to mark out this fair value gap. We can clearly see the price action traded into this fair value gap and gave a reaction out of it. Now, if you were to take this trade, your entry would have been at the start of the fair value gap, stops at the candle low that made the fair value gap, and let's say you targeted a 2R for this trade. This would have been your trade. Now, how do we further optimize this? We can clearly see that here we have this order block that price action also traded into and then reacted out of it. But remember, in order to optimize our entry taking, we need to drop into lower time frames. From the 4-hour time frame, we drop to the 15-minute time frame. Now, looking at the 15-minute, what do we see? We have in the 4-hour time frame fair value gap, we can see that we have this gap here, we have this gap here, and we have this fair value gap here. But why isn't this fair value gap significant for me? Because it has been mitigated. Price action has already traded into this fair value gap. So I can remove that. That leaves me with this gap, and it leaves me with this gap. Which one of the two is the most extreme fair value gap? It is going to be this bottom one. So that is the one that we want to be using in order to take your entries from. If I drag this along, we can see that price action not only mitigates the 4-hour fair value gap, but price action runs down to mitigate this extreme 15-minute fair value gap as well. Now you can do that, place your stop loss at the low of the candle that made the fair value gap, and your entry is at the start of this fair value gap. And immediately you can see that you went from a 2R trade up to a 6.87R trade. Your 2R would have been taken here at the bottom. That is how you can get sniper entries using an optimized fair value gap. Let me show some more examples. Here we have our second example, and we can see that fair value gap that formed from this candle's high to this candle's low. This is my fair value gap on the 1-hour time frame. So if you were to trade this, you would take your entry at the start of the fair value gap, stop loss at covering the high, and you would have targeted a 2R to start with, just to keep trading nice and simple. This would have been your trade. And you can see you would have hit take profit. It would have been a beautiful trade. But can we further optimize this position? Let's drop down to the 5-minute and to see how we can optimize this. Remember, we go from the 1 hour, we drop to the 5-minute time frame. Here I am on this 5 minutes, and how can you optimize this setup? Looking at price action, we can see that within this higher time frame fair value gap, we do have this fair value gap resting. So immediately we can move our entry up to this fair value gap at the start of that fair value gap. And your 2R just changed to a 3.73R entry. Now, how do we further optimize this? We can see that right above this fair value gap, we have this fair value gap. This is the example that I used in the slides earlier, and we can see that we do have this fair value gap that we can go ahead and further optimize our entry. Looking left, we can see that we have this breaker block that lines up with this fair value gap. What is this known as? This setup is known as ICT's unicorn because we have a breaker block overlapping a fair value gap. This is a unicorn entry, and we can see that our 2R just moved to a 5.37R. And guys, we didn't move our stop loss. We just optimized our entry taking. That's it. We optimized our trade taking. Further zooming in into price action to look for imbalances on a lower time frame. If you want to get mentored by me in your trading, go ahead and check out my link in my description. It will take you to my website where you can get all the information regarding the mentorship program. This mentorship program is busy changing people's lives. This is a no-nonsense, no BS trading program where I take you from a complete beginner to a professional trader, getting consistent payouts, making consistent profit in the market. And if you don't want to take my word for it, just have a look at the different reviews that this program is busy getting. Well done to the guys who stuck around to the end of the video, because in this example, I'm going to share with you a lot of golden nuggets, so be ready to take notes. Here on EURUSD on the 4-hour time frame, we can see that we have this very, very big fair value gap or imbalance between this candle's low and this candle's high. People will normally take their entries at the start of the fair value gap and place it above the swing high here, or place it above the high of the candle that made the fair value gap. Now, if I zoom that out, go to a 2R for this position, let's quickly see how this trade plays out. Playing this ahead, we can see that we've tapped into this fair value gap, and now price is busy consolidating, and eventually we just consolidate and we run lower, and price hasn't taken us out yet. This is just a choppy mess. Now, here we are on live price action. We still wouldn't have hit take profit. Instead, price is busy trading back up into our stop loss. So how do we actually go ahead and optimize this setup? If I'm just going to delete this and I'm going to go back to the start of this fair value gap to show you how we can optimize this. Remember, from the 4-hour time frame, we drop to the 15-minute. Now that we're at the 15-minute, what do you guys see? If I zoom in, what do we see? First of all, we can see that we have this fair value gap within the higher time frame gap, and we do have this fair value gap that's unmitigated. Now, that means that we can immediately move our entry from the start of this 4-hour fair value gap up to the start of this 15-minute fair value gap and place our stop loss at the high of the candle that made the fair value gap. So I can then go ahead and delete my other drawings, and we can immediately see that a 2R is over here, and let's see if a 2R gets hit. Going back to the 4-hour time frame just to speed things up, let's see if a 2R gets hit. You can see here that we have been tapped into our position. Let's see if our 2R gets hit. And yes, it does. Remember, if we didn't improve the fair value gap, if we didn't optimize it, we haven't hit a 2R yet. Now we have hit this 2R. But is there room for more improvement? Let's see. If we go back, let's see. Remember, all of this is done before you take your entry. I'm just showing you the different examples and showing you the different circumstances playing out. Going to the 15-minute again. Let's see. If I zoom all the way out, where is the lowest point of price action? If you look here, where is the lowest point of price action? It is over here. Now, let's see if there's a PD array that we can utilize. If I zoom in here, what do we see? We have this liquidity sweep. We've got two down close candles that was closed above, giving us a valid order block that pushed price along, which is what we want. Now, if I drag that order block along, does that order block, remember this rectangle is that order block overlaps with this fair value gap. So we can further move our entry up to this order block. So now we have completely optimized this entry from a 2R all the way to a 5R. So let's go back to the 4-hour time frame to see how this plays out. We can see that order block is a wick on the higher time frame. Let's see how this trade plays out. We are tapped into our position and immediately the market falls lower. That just shows you how price action is drawn to different PD arrays, and especially when they overlap with each other. That is exactly what I want you to do to optimize your trade taking, regardless of the strategy you are trading. Guys, this isn't a strategy video. This is a video explaining how to get sniper entries in the trading the markets. I hope you guys learned something today. I hope you enjoyed the video. If you did, leave a like, leave a comment as always. I reply to every single comment out there, and I'll see you guys in the next video.